if I'm in the bathtub and Amy's holding a radio that's plugged in and is about to throw it in and says, if you don't sell everything we own tomorrow, I'm going to presume that's a good indication that the cycle is about to end. Other than that, look, it's really very simple. It's interest rates. You know, we're all very the fuel of the fire of the past decade has been interest rates. When the crash occurred in 2008, and we're all looking in the mirror and saying, well, what does all this mean, and where do we go from there? And the stock market was down in the 8,000 lower range, and the question was, where can we invest? Where do we put our money? I'm in the apartment business. Apartments were able to continue and actually flourish for two reasons during the last 10 years. One, because we had the federal government involved in the financing of apartments with Fannie and Freddie, and they provided consistency and liquidity, through the down times for apartment buyers and developers to finance, and the general interest rates relative to apartments remained very low to this day. So that's fueled our tremendous growth. The other issue is, and this is ancillary to your question a bit, but through the crash, there was a paradigm shift of people moving from single-family homes to apartments because they couldn't qualify for mortgages, and that also spurred the development of apartments. So it's been a good time for apartments. It's been the best time for apartments in my lifetime, and I think probably in many generations, the last 10 years. That comes to a screeching halt, at least in terms of the prolific expansion of that, when interest rates start becoming meaningfully higher. So we keep looking, and by the way, for the past 10 years, every transaction I've acquired, and I've done quite a few, I use fixed rate financing. Now everybody looks at me and says, "You're crazy. What are you crazy? You should be using floating rate financing." They were all right. Every time they said it in retrospect, they were all right. I would have done so much better over the past 10 years with floating rate financing. But I'm old school. I like to know what I've got. So today, I say for sure, fixed rate financing, the longer the better. Give me 10, give me 12 years for apartments. And that's what I'm looking for, because the interest rate variation is going to be the key to the change in the trajectory.
That's amazing for everybody taking notes. That is really important considering the Fed is looking at 3 rate hikes this year. So that's relevant to those floating rate people a little bit more now. Is that right?
It's relevant to all of us, floating and fixed rates, because it's a function of timing. Even if we're not impacted by an acquisition right now because we own something, our buyers are going to be impacted. Your capitalization rates are going to be affected dramatically by whatever prevailing interest rates are. So as interest rates increase, unless there's concomitant increase in rents and generalized inflation, then you're going to see a movement in cap rates, which is going to make the asset less valuable to the next buyer.